Okay, so is it actually possible for a stock, especially one this essential, to be Wall Street's AI darling and maybe a valuation villain at the same time? That really seems to be the core conflict brewing around Taiwan Semiconductor, TSM, right?
Yeah.
Especially with their huge Q3 earnings coming up October 16th. Based on our research, this deep dive is all about navigating that countdown. We need to figure out if this, groundbreaking tech story can overcome some pretty cold financial skepticism. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Let's dig into this core conflict with TSM. Fundamentally, TSM is almost untouchable, right? They make the chips, almost all the advanced ones. And the recent news flow is just, undeniably bullish. They unveil that game-changing liquid cooling technology that's absolutely critical for future AI chips.
Yeah, critical is the right word. And what's fascinating here is how that innovation news landed perfectly alongside really spectacular financial results. We saw that huge 31% year-over-year jump in September revenue, so analysts overwhelmingly bullish.
Yeah.
Something like 94% have a buy or strong buy rating. They're expecting Q3 revenue somewhere between $31.8 and $33 billion, all driven by AI demand.
And a big profit jump expected, too.
Yeah, consensus is looking for a record 28% jump in profit. Seems unstoppable on the surface.
Okay, that sounds completely flawless.
Yeah.
Yet, here's the unbelievable wrinkle, the part that's hard to square.
Yeah.
If you look at the traditional intrinsic value analysis, like what the company's actually worth based on earnings, cash flow, it suggests the stock should be priced, way lower. Around $122 per share.
Exactly. And TSM is currently trading at, more than double that intrinsic value. So think about what that means for you, the investor, this DAP. It means the Q3 report can't just be good. It pretty much has to be perfect, utterly perfect, and come with a wildly optimistic outlook just to justify where the price is right now. Oh, and we should probably quickly mention there's that minor distraction, the technology leak probe in Taiwan. Seems mostly overlooked by the bulls, but it's out there.
Okay, wait. If the underlying math, the valuation is that scary, what's the market actually telling us right now? Are traders hedging? Is there fear priced in?
There is. Yeah, the broader market sentiment shows real caution. If you look at the options market, the put-to-call ratio is 1.08.
Okay, what does that mean exactly?
It means basically for every 100 bets on TSM going up, there are 108 bets on it falling. So a slight bearish tilt, a hedge against disappointment, but maybe more telling. The volatility priced into those options implies a nearly 7% move after earnings, up or down.
7%?
Yeah, that's a huge expected swing. Really highlights the risk everyone sees here. Short interest is low, though, only 0.62%, so not many are actively shorting it outright.
And the technical chart? That certainly seems to confirm the fear, doesn't it? That big drop last Friday, over 6% on heavy volume. That wasn't just noise.
No, definitely not noise. It felt like a violent confrontation on the chart. Pretty clear confirmation that institutional sellers were locking in gains, reducing risk ahead of this Q3 uncertainty.
So the momentum just stopped.
Stalled and flipped negative. While the long-term story, the big picture, still looks positive, short-term money flow indicators show a clear exit. That calm, steady climb TSM had earlier this year. That seems definitively over for now.
Okay, so we've got this undeniable technical damage institutions selling, colliding head-on with this unparalleled fundamental catalyst, the cooling tech, the strong revenue. How do you square that into a cautiously bullish outlook for the days leading up to the report? It seems counterintuitive.
It does a bit, but the rationale hinges entirely on the sheer power of that catalyst news. That cooling technology announcement combined with the strong September pre-release numbers, that's what's fueling this pre-market rebound we're seeing. It's an attempt to override the technical breakdown. Basically, the fundamentals are trying to fight back and reclaim control before the actual report confirms anything.
Right. So for listeners focused on the immediate action, maybe trading around this, what are the key levels? Where's the battleground?
The immediate focus, the key battleground, is reclaiming that psychological $297 to $300 zone. Getting back above there would be a strong sign for the bulls short term.
And if they fail, where does the consciously bullish idea break down?
It's invalidated if the stock closes below Friday's low. That was $280.33. A close below that would pretty much confirm the bears have taken control, signaling that good news just wasn't enough to overpower those valuation fears.
Okay, so at the end of the day, you really have to decide. Is this AI-fueled story, the necessity of TSM, strong enough to overcome the cold, hard reality of that massive overvaluation when the actual Q3 numbers land? That's the crux of it. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.